Hi, sir.
Hi.
I have a quick question actually about the assignment I just remembered.
Yeah.
Now we chose two companies. They have different financial years, as in like, one company, finishing at in December, the other one 31st March. So is that all right, or do we have to match?
Yeah. You don't need to make adjustments. You just compare as it is. Otherwise, it's if there's a significant change in the year end, let's say from January to March, so then you can discuss, right? So let's say if there's a significant change, like COVID started in the March, right? End of March. Therefore, no impact to both the companies. Yeah. But other than that, if there are any particular reason, to perform better the last quarter, or poor performance due to any particular macroeconomic reason, or in a political reason, or import ban, or any particular reason during that period, then you can explain it in your assignment. Okay. Otherwise, you don't need to make adjustments to have common period. It's not practical.
Okay. All right. Thank you, sir.
So relating to the same thing, do you compare with the company or the industry of the same?
The industry data, like in the banking industry, there are a lot of information available, and other industries, I think, bit difficult to get industry information. Like industry overall numbers should be available. Like if it is tourism industry, you should be able to get the tourist arrival, right? Sometimes even the revenue from tourism, the entire you can compare it with last year, and the growth you can identify. But other than that, it's very difficult to calculate the industry profitability, industry GP, right? So that's why I want you to compare and benchmark with another competitor.
So not the industry, but a competitor, is it?
Yeah. If there are industry details, you can compare them as well. Like if it is banking industry, you can calculate, you can take the loan growth, right?
All right.
Lending growth. And so let's assume that your company growth is 10%, the competitor's growth is also the 10%, and industry growth is 15%, right? So then it's more meaningful if you compare with the overall industry, if the industry information is available.
Right. It's better to put another company as well with the industry, right?
Yeah, industry, whatever the available information you can use.
Right. Okay. Thank you, sir.
Okay, the same question paper. Question number 2. Question number 2. Part A. This is December 2020, question number 2. Same paper. Question number 2. It's a question on working capital. Right, part A. To save time, hope everyone is back. Anton, Supun?
Yes, sir.
Present, sir.
Dilshan, you are there, right? Okay.
Yes, sir.
Okay, right. Working capital is the difference between a company's current assets, such as accounts receivable, and inventories of raw material and finished goods, and its current liabilities, such as accounts payable, right? So what is working capital is given. Explain the importance of working capital management. Explain the importance of working capital management and why we need to manage working capital, and you need to explain the importance, right? And as you all know, working capital, right? Again, Yeah, no, I don't need to use the Excel sheet. Working capital, the difference between current assets and current liabilities. And so this amount we need to manage. And the main reason is why you need to manage is you need to manage liquidity of the company, right? So the managing current assets and current liabilities are important to manage liquidity of the organization, right? So short-term payables, you need to settle when they fall due from your current assets. So therefore, you need to maintain sufficient amount of current assets to pay off your current or short-term liabilities, right? Therefore, the first objective of working capital management is to ensure liquidity of the organization, right? In other words, you have to have enough money to pay your liabilities when they fall due. When there's a payment, you have to have money to pay that. Otherwise, you will face liquidity issues, right? So first objective is to ensure liquidity of the organization by managing working capital. The second objective, right? I don't know that I'm too fast. Yeah. So if you can on your video camera 1 or 2, then yeah. So if you want to note down, I don't know whether you are noting down. Yeah. Okay. Right. And the second reason why working capital management is important, if you invest too much of money in working capital, right? If you invest too much in working capital, you are inefficient. There's a negative impact to your profitability. So therefore, you need to minimize investment in working capital as much as possible without creating a liquidity issue to improve your profitability, right? So therefore, not only ensuring liquidity, you need to maximize profits also by managing working capital. So therefore, working capital is important for organization. Five marks, you don't need to write essays. But you need to highlight these 2 points, right? And you need to ensure liquidity and ensure to improve profitability, right? Okay, right. Next, part B. Yeah, let's read the question and again try to understand, right? Don't memorize answers. If I get this kind of a question, this is how you need to do. No, right? Try to understand, then it's very easy. All these questions are not difficult. And yeah, let me read the question. Let's read the question together. Philips NV, which was formerly one of the largest electronic brands in the world, has now divested the other divisions and is currently focusing in the area of health technology, right? This company now in health technology. The company is in the process of estimating working capital requirement for the year 2021, right? Now they are estimating next year working capital, right? So when you prepare budgets of your company and you estimate the number of items, right? And you estimate your sales, you estimate your cost, purchases, you estimate your capital expenditure, and the same way you need to estimate your working capital also. So what would be my working capital requirement for next year, right? Whether the existing facilities are sufficient to cover the working capital requirement, or if there's a working capital, if there's an increase in working capital, how are we going to finance? Whether we are going to get the money from the owners by way of issuing shares, or whether we are going to use debts, borrowings, bank borrowings, or any other form of borrowings to finance the working capital requirement. So therefore, every year you need to forecast your working capital requirement, right? And when you prepare the budgets, you do it. You do a cash flow forecast, and you forecast your income statement, you forecast your balance sheet, and based on that, you estimate your requirement, right? So they are in the process of estimating the working capital requirement. The sales estimates of the company for the next year, USD 6,000 million. So their sales expected as or estimated as 6,000 rupees or dollars. And the company expects to maintain a GP margin of 40%. The GP margin expected to be 40% for next year, right? Sales 6,000 and GP margin is 40%. Working capital cycle of the company is expected to be as follows. So they estimated the working capital cycle. Average inventory turnover ratio 6 times. Average debtors turnover ratio 7.2 times. Average creditor settlement period is 35 days. Right? Average inventory turnover 6 times, average debtors turnover 7.2 times, and average creditor settlement period is 35 days. Estimate the working capital requirement of the company based on the above information. 5 marks. Right? You need to estimate the working capital requirement. How you estimate your working capital requirement? You need to estimate your current assets. You need to estimate your current liabilities. The difference between current assets and current liabilities is the working capital requirement. Right? So let's use the Excel sheet. Let's do this together to save time. And this is December question number 2. Right. Can you see the Excel sheet?
Yes, can see, sir.
Right. You don't need all these things. Just right. Sales 6,000 and cost of sales. They say the estimated GP is 40%. Therefore, cost of sales percentage
60%.
60. Now you can calculate the dollar value. These are in millions. USD millions. Sales 6,000 and GP 40% of sales, and the cost of sales 60. So therefore, you can calculate the cost of sales value and GP, gross profit. Right. Cost of sales 3,000, 60% of 6,000, and GP 40% of 6,000 sales. Right. Now you need to estimate debtors value, inventory value. Yeah. So our objective is to estimate working capital. Working capital. How to estimate this? We need current assets minus current liabilities. Current assets minus current liabilities, right? So mainly current assets includes debtors plus inventories. And current liabilities include mainly accounts payable or creditors. Right? Accounts payable or creditors. Right? So what you need to do is you need to estimate debtors value, then inventory value, and creditors value. Estimate these Right. Yeah, I'm sharing again the question. So we need to estimate debtors, but in the question, debtors value is not given. Sales value is there, but debtors value is not there. Right? Sales value is 6,000 and the debtors turnover ratio is given. Debtors turnover ratio is given. Right? Turnover ratio is given. And inventory value is not given, but inventory turnover ratio is given. So therefore, we should be able to calculate the value of debtors and value of inventories. Right? Again, I am sharing the Excel sheet. Right. Debtors turnover. If you can remember the formula, can you see the Excel sheet?
Yes.
Right. Debtors turnover. Right. And in this, for given in the question, how many times debtors turnover?
7.2.
7.2 is provided. The answer is given. And also, the sales also given. Sales value is
6,000.
6,000. It's also given. Right? The sales given. And what is missing?
Debtors.
Debtors. So now you can find. Right? Now you can find. So if you write a formula by using the same formula, debtors, how you estimate?
6,000 divided by 7.2.
Yes. Sales divided by you don't need this formula, but it's better if you know this, right? So this is what we same formula. This is from the same formula we derived debtors. And sales 6,000 and turnover ratio is 7.2. And now we can estimate the debtors value. How we estimate? 6,000 divided by 7.2. 800. 33. Right. So the answer is 833. And inventory value also you can estimate. The formula is this: cost of sales divided by inventory turnover ratio Cost of sales divided by inventory turnover ratio. Right. So in your in the question, the inventory turnover ratio is the cost of sales 3,600 and the inventory turnover is 6, right? So 3,600 divided by 6. The answer is 600. Then the creditors value, right? And for this, turnover ratio is not given, creditors days given. So therefore you can use this formula, right? So this 365, this cost of sales is 3,600 and you need to divide it by 365 to calculate daily purchase. Your creditors value, creditors days is 35, multiplied by 35, right? Cost of sales, that's your annual purchase, divided by 365, then you get purchase for a day and multiply it by 35, that's the creditors days. It is given in the question. 35 is given in the question. This is 365 is number of days for the year, right? So creditors value is 345. And now working capital, we can estimate how debtors plus inventories minus creditors. Debtors plus inventories minus creditors. If you need to, write down the answers, let me know. Right? How you get this working capital? Debtors 833, inventory value 600, and debtors plus inventories minus creditors. Right? So we estimated the working capital account of the company. It's 1088. Working capital account of the company, 1088. Any questions? Any clarification? Any doubts you have? Kirti, is this difficult or?
Still trying, sir.
Okay. Yeah. Supun?
It's all right, sir.
Okay. Okay. You need to practice this, Supun. You need to practice this. There are similar questions. And let's do one more question today. And then you will realize that these are not difficult. Only thing is you need to understand these formulas, right? But again, you don't need to memorize all these formulas. So what you need to understand is the logic, right? So debtors value, the formula is sales divided by debtors turnover ratio. And this is the open book exam. You can take any notes. So therefore, if you think that if you can't memorize all these things, you can take even this kind of a note. But the most important thing is when you do it practically, you need to understand.
Yeah.
Right. Do we need more time to write down the answers?
I'm all right, sir.
Right. Okay, let's see the question again. Yeah, so the first part, estimate the working capital requirement of the company based on the above information, 5 marks, right? So we estimated the inventory value, debtors value, creditors value, and estimated the working capital, 5 marks, right? Part 2, the company is planning to finance 80% of the working capital requirement through a bank loan at the rate of 10% per annum, since all internally generated funds are expected to be used for the capital expenditure, right? So they are not going to use the internally generated funds. Estimate the value of the working capital loan to be obtained from the bank and the recommended tenure, right? So loan period and the loan amount. Loan amount is not that difficult. The company is planning to finance 80% of the working capital requirement, right? Through a bank loan, right? Therefore, loan amount is 80% of your working capital, right? Okay, let's I will type, otherwise loan amount is 80% of working capital, and as you all know, yeah, so as you all know, the working capital value is 1088. 1088. Working capital value is 1088, and you need to multiply this by 80%.
Yeah.
80%, right? So how you get this? How you get this? 1088 multiplied by 80%.
Yes.
We'll discuss a similar working capital question today, right? So otherwise you might forget if we discuss next week. So we'll discuss immediately after discussing this question. Then it's, yeah, easy for me also. Right. Then you need to estimate the loan tenure, loan period. As you all know, when you obtain a working capital facility, working capital facilities are revolving, right? Let's take you are an exporter, right? You are an exporter, and when a customer opens a LC for a new order, so what you do is, and you go and talk to the bank and get a loan against this LC. Or sometimes there are different working capital facilities. Sometimes they call him loan against packing, LAPC, loan against packing credit, or different terms are used. But whatever the term, and if you receive, let's say 100,000 order, the value of the order is 100,000, and you talk to the bank and they give you a percentage of the sales value as a loan to process the order, right? You need to purchase raw material, you need to process it, packing material, everything. For that, the bank give you a loan. These are working capital loans, right? And let's say you receive an order today and you go to a bank and discuss with them and get a packing credit or whatever, a working capital loan, right? And so you process the order in 1 month's time and ship the goods to the customer, and you get the payments in 60 days. right? And you receive the order today, and you will receive the money in 60 days time. So therefore, until 60 days, you won't be able to settle this facility. We are expecting the payment from the customer in 60 days, right? Not, from the date of sale, you receive the order and you process and you convert raw material to finished goods, and thereafter you ship the goods to customer, and finally you get the goods. So for this total process, it takes 60 days. So therefore, when you negotiate with the bank, you need to negotiate and get a loan for 60 days. So you get the order and again get the money from a bank by way of a working capital loan, and use that money to purchase raw material, process it and ship it, and the customer make the payment for your LC. So then the bank can settle the loan from the LC, right? Again, you get a new order, the same process you need to do. So that's why we call these kind of loans are called revolving, right? You are financing the working capital, right? The period is your working capital cycle, right? The period is the working capital cycle, right? How you calculate the working capital cycle, right? So how you estimate the working capital cycle? Can you see the Excel sheet? Can you see the Excel sheet?
Yes, sir.
Yes, can see.
Yeah, okay. Working capital cycle, right? We want to estimate working capital cycle, right? And how you estimate this? We need debtors days. Plus inventory days. Minus creditors days. So this is how we calculate the working capital cycle. The time period taken to process raw material, sell them, and collect them from customers, the total time period taken is this, right? The total time period is this. Working capital cycle, right? And also debtors days, another name for this, average
Okay.
debt collection period. Debtors days is average debt collection period. Another name for inventory days, average inventory holding period. Average inventory holding period. Creditors days, average creditors settlement period. Right? So different terms that we can use. These just for your information. In different questions, you get different terms. Right? So we need to estimate the working capital cycle. Right? To estimate working capital cycle, you need to calculate debtors days or average debt collection period, average inventory holding period, and creditors days. Let's see whether these details are there in your question. right? So one good thing, the creditor's settlement period is given. Therefore, you don't need to estimate this. 35 days given, right? This is the creditor's settlement period. Creditor's days is given. But inventory, the average inventory turnover ratio is given. Debtors turnover ratio is given, but we don't know the debtors days, inventory days. We need to estimate, right? We need to estimate, right? How to estimate? Can you see the Excel sheet?
Yes, can see now.
Yeah, okay. So now we need to estimate. Now we need to estimate debtors days. Days. And normally how you estimate this? Debtors days, debtors value divided by sales into
365.
365. All right. So as we have already estimated the debtors value, we can use this formula. But also there's another alternative formula. We can use another formula, right? If the turnover ratio is given, right? So if the turnover ratio is given, it's very easy. 365 divided by debtors turnover. Right? We can use one of these formulas. This one or this. You should get the same answer. Right? Let's use the first formula. Debtors value we estimated. What's the value of debtors?
833.
833. And what's the value of sales?
6,000.
6,000. So you need to multiply this by 365. What's the answer? Debtors value
3.67.
sorry. $50.69. So let's say 51 days. These in days. 50 days. So our average debt collection period is 51 days. Right? Let's use the second formula. 365 and turnover ratio
7.2. 7.2.
Yeah, 7.2. Right? So we can calculate 365 divided by 7.2. You get the same answer. You can use one of these formulas, debtors days. Right? These are very easy things for those who are specialized in finance, but the sales and other students, I think these are not difficult. Only thing is we need to practice, right? You need to write down these formulas and you don't need to memorize. You can take the note. Right. Right. So now let's estimate the credit, the inventory days. We need to estimate inventory days. Similar formula, right? If you know the inventory value divided by cost of sales. So for inventories and creditors, we can't take sales, we need to take cost of sales. And multiply this by 365. This is one formula. Or we can use the second formula, inventory days how you estimate this?
365 divided
365 divided by
inventory
inventory.
turnover.
Yes. Right. So let's do the calculation. The inventory value given in we
600.
calculated the inventory value.
600.
Yeah, is 600. Yeah, 600. And the cost of sales?
3,600.
Yes, 3,600. Yeah. The cost of sales value is 3,600 and into 365. Right, and the answer is 600 divided by 5 into 365. This is 61 days. Can you round up? 61 days. Right. Again, you can get the same answer from the second formula also, 365. And the inventory turnover ratio is given in the question. Turnover ratio is 6. And the answer is 365 divided by, again, the same answer. You can use one of the formulas. Right? Creditors days given in the question. Right? So ultimate objective is to estimate bullet train එක වගේ නෝදන්නේ. Right. So why we estimated all these days, we need to estimate the working capital cycle. We need to estimate working capital cycle. Working capital cycle. So we want to estimate this. And now we know debtors days, how many days?
51
Debtors
days. 51
60.
days.
Yeah.
51.
Yes, let's say 61, round up. right?
51. No?
Okay, 51. 51 plus inventory days
61.
61 minus
35.
35 is given in the question. Creditors days given in the question, therefore you don't need to calculate, right? Debtors days 51, inventory days 61, and creditors days 35. And therefore your working capital cycle is, right, 51 plus 61 minus 35. So your working capital cycle is 77 days.
Just a question, not directly related.
Yeah.
How does it work out when you can generate or when you can achieve negative working capital balance? Or is it you put it in terms of the working capital cycle, or what do you mean by negative working capital, and how does that
Negative working capital or negative working capital cycle?
negative working capital?
Okay, okay, good. And today also we came across similar situation practically, right? So how you estimate working capital? Debtors plus inventory
minus creditors.
minus creditors, right? So let's do the the calculation for Cargill's. Debtors value, debtors value, Cargill's
0, close to 0.
Yes, 0. So this is 0 plus inventory value.
Will be
How
high.
many days? How many days roughly? How many days inventory they maintain?
7 to 10 days.
Yeah, maximum. Yeah, let's say 14 days. Let's say 2 weeks. 14 days. And this is 14 days, huh? 14 days, not in months. And creditors in days, how many days they get credit from suppliers?
120.
Yeah, 120. So now you can understand, right? If you calculate the working capital here, right? Sorry, the answer you get is this, right? 14, sorry, the 14 minus 120, right? Is 106. For Cargill's, this is a healthy ratio, but if it is a other company, this is not a healthy ratio, right? The question is, you have to settle 120, but you have short-term assets of 14, right? And the supermarket industry, this is a healthy ratio, but all others, this is not a healthy ratio. Your negative working capital. We calculated in days, even in rupees, the same thing, right? Let's assume this is in rupees, the same thing, right? This is negative working capital, right? In other words, the current liabilities are more than current assets. So you need to settle 120, but the assets you have is only 14 to settle 120. right? Therefore, this is not a healthy ratio if it is other industry, but for supermarkets, this is a good ratio, healthy ratio, right? But in general, let's say, right? So that's why I want to discuss today. Also, we came across one of our employee came and discussed one company's financial statements, and so we noticed that they are they face the what is this serious loss of capital situation. So their net assets are less than 50% of stated capital. The company is having losses, and therefore the company is facing serious loss of capital situation. And also on top of that, their current assets are less than current liabilities, or current liabilities are more than current assets, right? So from two sides, they are having issues, and short-term and long-term both. Short-term liquidity issue is they don't have enough assets to short-term assets to settle their short-term dues, and the long-term also, they are the net assets are declining day by day due to the losses. So it's an indication of going concern. It's an indication of going concern, right? So therefore, negative current assets, negative working capital is not a good thing. But you need to understand the exceptions, right? Like Cargill's. So other than that, I don't see most of the other businesses, the current, the working capital should be positive, not negative. Right. Hope I answered your question, Lakshman.
Yeah, but tell me, these companies are also generating cash, no? So
Yes.
how does that come into the equation?
Okay. It's a good question, right? They don't have debtors, but they sell in all cash sales, right? And what they do is, do you think that they accumulate cash in their safe?
They invest that, no? I mean, that's why they have banks and all of that.
So they don't keep cash in the form of cash, right? They invest in, they use it for expansion or some other work, right? They don't keep in the form of cash. So every day they keep the whatever the teller's minimum balance. Other than that, they deposit, and they use it. And every day they open the new supermarket, and so therefore they need money for the reinvestment. So they reinvest. They don't keep the cash balance. No point of keep. Let's say even if they don't have reinvestments, right? You don't need to keep in the form of cash. They can do an investment, right? In a fixed deposits or savings account or whatever. Or you can buy shares, or you can use it for expansion, right? Normally you don't keep cash in the form of cash. So there's a holding cost. Right. So in this question, the working capital days, 77 days. So therefore, this is your working capital cycle, and this is the loan period. In your question, there are two loan tenure, right? So the loan period is 77 days. So if you get a loan today, you will have to settle it in 70 days time. And then again, you need to take a new loan. Right. So loan amount we estimated. This is also part of the answer. Loan period or loan tenure. Right. And loan amount, how much? We estimated.
It is 870.
870. Yeah.
Yes.
So there are two answers in this question. Loan amount is 870, and the loan period 76.52 for let's say 77 days roughly. Yes. Okay. Back to the paper. Right. Identify the alternative strategies available for the. Can you see the question paper?
Yes, yes, can see.
Yeah. Yeah. Identify the alternative strategies available for the company to reduce working capital requirement by 2020. Right. And so they originally estimated their working capital requirement, and so now they say it's too much, right? It's too much, therefore they need to reduce it, right? And what are the possible strategies?
Extend the debtor period.
Extend the debtor period is to reduce your working capital.
And it's gross.
Yeah, other way around, right?
Yes,
Sorry, other way.
yes.
Increase
other
the
way.
creditors period.
Yeah, extend
Yeah.
the creditors.
Extend the creditors, reduce debtors, and reduce inventories. Yeah, but again, for this kind of a question, this is the target outcome that you are going to get, but better specify strategies, how you are going to reduce debtors, how you are going to reduce strategies, reduce inventories, or how you are going to increase your creditors, right? Yeah, what are the possible strategies to reduce debtors? Strategies to reduce debtors.
Give discounts or incentives.
Okay, yes, right. I don't know whether this is happening in Sri Lanka, but other countries. Most of our clients in UK and Australia, they have these kind of options, right? If you settle in 7 days, you get 2% discount or something like that, right? So therefore, you encourage them to settle in 2 days to the 1 week time. Right? Then you get 2% discount, right? You can offer discount for early payment, right? So one strategy is we can offer discounts for early payments to improve debt collection. Any other strategies? Any other strategies?
Have a robust collection module.
Yes. So you need to improve your improve your collection strategies. So if your team is not sufficient, you can increase the collection team, or let's say if you are if you don't have a call center, you can start a call center, right? So various ways are there. You need to streamline your collections, right? Yes. And sometimes even you can train your staff. I think in Sri Lanka, it's very difficult to manage collections, right? Yeah. So I think for good brands, easy, but the others is, I think, a bit difficult. So with our experience in Australia, so they are very easy, right? So, you get difficult customers, very rare. Right. So most of the customers, big customers, you go to their portal, upload their invoices and other things, and if there's a dispute, you clear it and you get the payment, and you can see even the due date or the payment date also from their system, right? They have systems called Prime Revenue and different systems. So, and you go and upload the whatever the invoices, and the three-way matching like purchase order, GRN, and the invoice is automatic process. So we can So the system indicates the due dates also, right? And if there are disputes, let's say you deliver 10, but as per their records, if it is 8, so then you need to have a manual intervention. You have to submit the proof of delivery, POD copy to them, and so you need to sort them out, and thereafter it's easy. And also, if the customer is having financial difficulty, sometimes there was a bush fire there, and so after that, so some customer they straight and say, we are having an issue and we can't pay this, so we'll pay it in 3 months, right? So therefore, relatively, I think easier in those countries, right? And yeah, the next then strategies to reduce so to reduce debtors, you can even promote cash sales, right? So you can give incentives to your sales team if they do cash sales, to promote cash sales. So even you can do discounts to the customers if they pay and deliver, right? Pay and take the goods, right, to reduce debt collection, and also to improve your inventory. So you can implement, you can reduce your wastage, or you can implement lean practices, or the just in time, right? And you can reduce the lead time with the suppliers. So if the supplier take 3 months to deliver the goods, once you place the order, if you can find an alternative supplier with a lower lead time, so then you can reduce the inventory as well, right? If your production lead time is high, if you can reduce it, again you can improve inventory management. So likewise, there are strategies, but remember, don't write reduce debtors, reduce inventories, and increase creditors. So those are strategies. So that's the outcome that you want to achieve. And therefore, if it is strategies, you need to. And with regard to creditors, again, and you can renegotiate with suppliers for extended credit period, and you can find alternative suppliers. So the suppliers who are willing to offer more extended credit period, right? And so these are possible strategies, right? 5 marks, you don't need to write essays, right? Discuss the possible issues the company may face when implementing strategies mentioned in 3 above. So what are the possible issues? Right?
Losing suppliers.
Losing suppliers, yes, right? So some suppliers are having financial difficulties and they can't extend more credit. So therefore, you might lose some of the good suppliers. Yes. Others, other issues, possible issues.
So if you start giving incentives to staff for cash sales, that can lead to fraud.
Yes, right. And there can be a negative impact. Yeah. Yes. Other than that, possible issues. And you might. Sorry.
The need to increase inventory due to supply chain disruptions.
Yes. Right. So if there are disruptions, you need to maintain inventories, right? And if you reduce, if you maintain minimum amount of stocks, and there can be stock outs, right? So if there's a suddenly there's a big demand for your products, and your stocks are not sufficient, there can be stock outs, so you might lose some of the sales, right? And also when you push for collections, you might lose some of the good customers as well.
And also sometimes you might lose brand image as well.
Yeah. So yeah, you might lose the brand image as well. So for this kind of answer, the question, there's no standard answer. Whatever the answer you write, you need to justify. And 4 marks. Again, 25 marks question, and not difficult at all. Right? Okay, let's any other clarification or any other doubts you have to clarify? Okay, there's one more question from the same topic, and yeah, before discussing that question, and we need to discuss this working capital question. Plus, I want to discuss topic 1 and 1 or 2 past paper questions. And is it possible for us to have a combined class on Saturday? So then Saturday itself we can finish. Can we have a combined class this Saturday morning? Morning to evening. Let's say as you are behind the Saturday class, so we can start in the morning. And I think if we can have 3 hours more, so they are starting at 3 o'clock. And if we can start at 9 to 12, is it possible?
Not possible. Saturday morning, not possible.
Saturday
For me.
morning. All right, okay.
For
Yeah,
me.
yeah.
There's a
yeah.
principle.
Okay, okay. Some of you all are working. I know that you all work Saturdays. Any alternative day? The issue is to have a combined class. We need 3 more hours. We are behind. We need to discuss topic 1 revision, in the sense I want to discuss at least 1 or 2 topics, right? And thereafter all the past paper questions from that topic, right? So then you understand the pattern and how to write and how to study. Any other alternative day? What about tomorrow?
Possible.
Right. So if we can have 3 hours, then we can Saturday evening 3 to 6 we can combine if you want. Or otherwise what we can do is we have today's 2nd, 9th also we can have a class.
Yeah, can we stick to the Wednesday class itself, sir? Because
yeah, I prefer if I can take another 3 hours so I can discuss more papers, and I won't discuss at least 1 or 2 paper, one or two topics also with you. Yeah, it's up to you, right? And yeah, so yeah, we can have a class on 9th, next Wednesday, Thursday, or what we can, yeah, 2 options are there. You can join this Saturday class 3 o'clock, 3 to 6, and we are going to discuss some past paper questions. And after that we can discuss next 9th also. Or if you think that next 3 hours, if we discuss 9th, if that is sufficient, we can stop. We don't need extra classes. Yes. And the issue is I missed 1 or 2 classes. I was sick, and Saturday class they had a void day also, but you all didn't have that opportunity.
Saturday 3 to 6 is okay for me.
All right.
3
okay.
to 6.
Yeah.
I don't
so
know
then,
for others.
Yeah. Yeah.
That's okay.
So what
Okay.
about others?
Supun?
3 to 6 is, I think it should be fine. Yes, sir.
Okay. And Lakshman? Or Dilshan? Lakshman?
So 3 to 6 okay. And what you said on 9th also you want to make another additional class, right?
Yeah. So 9th also I can do. I wanted to complete everything this Saturday, but if you think that Saturday morning is impossible, or even tomorrow evening is not possible, so then only option is to have a class on 9th. And if you can finish it early, so you also have time, and if you have questions, even I don't mind even if you call me and ask, right? And rather than working last moment. Yeah.
When is the FSA? 11th or 18th?
11th. It will be on 11th.
FSA?
Financial Statement Management.
11,
Yes,
right?
it's on 11th.
Yes.
11.
It's on 11th.
11.
Exam
11.
on 11th.
Exam
And
is
the
on 11.
financial management is also 11th.
No. Some
That
other
is on 18th.
18.
That is all. Then managerial accounts 11th.
Not too sure.
Not too sure.
Yeah. So, yeah. So one option is we can have a class, the combined class on Saturday.
And the
3
additional
to,
one on will be on 9th also can possible, right?
yeah, 9th also possible. Or if it is instead of 9th, if you can make it early also, I don't mind. Instead of Thursday, if you can make it on Monday or Tuesday or whatever the day, so I can do it.
Better to have one it on Saturday evening, no sir.
Saturday, yeah, Saturday evening we can have, but
Better,
But there should be additional another one. That's what.
yeah,
no,
combined class.
yeah,
Combined class. So if I can get another 3 hours, yeah, so then you know, I can cover like everything.
so 9th
So,
is okay.
9th would be
Actually,
okay.
sir,
Then no.
already we have a FM combined class on the like this Saturday at 6:30. So
okay. So then can we start
Why
the
don't we have this tomorrow's one? So then we have tomorrow and Saturday. So then
yeah, then
we can finish it off.
We don't need to have a class on 9th.
Yeah,
Yeah.
that's also possible.
That's the
Possible,
best thing, I
possible.
believe.
Possible.
Okay. So then we'll take a decision. Tomorrow I will inform Nipunika to have a class tomorrow. And
Yes.
Nipunika, are you there? Nipunika, are you there? Yeah, I'll call her and check. And so
Yes,
if
not
there is
there,
no
sir.
issue, I will ask her to organize a class tomorrow. And let's take 3 hours, and then we can discuss then we can discuss topic 1 and what are the questions from topic 1 also, and then Saturday we can finish everything.
Yeah.
That's ideal, I believe.
All right. Okay. Then we'll do like that. Right. So then next question. Next question, again a working capital question. June 2020. Yeah, June 2020, question number question number 2. June 2020, question number 2. Or we can, yeah, let's discuss 2021 June question. Second question. 2021 second question. We can discuss this question next Saturday. So please find the paper 2021 June, question number 2.
Right.
Yeah, let me share the paper. Right, this is last paper, question number 2. Right, part A. Can you see the paper?
Yes, sir.
Can you see the paper?
Yes,
Yes,
sir.
sir.
Yeah,
Yes,
we'll do this quickly. Right, working capital assesses a company's ability to pay its current liabilities with current assets. It's a measure of company's efficiency and short-term financial health. Discuss the above statement. Right, it's very similar to the previous question and in a different way. Right, so working capital is a measure of company's efficiency and short-term financial health. You need to explain. Right, so efficiency is if you invest too much, you are inefficient, and the profitability is low, there's a negative impact to your profitability. And if you want to be efficient, you have to have the lowest amount of current assets, but to maintain liquidity, short-term financial health, you need to maintain adequate amount of current assets. So therefore you need to balance these two when you manage working capital of the company, right? Okay, to save time, Mr. Can you see the question, part B? Part B?
Yes.
Yes.
Okay, right. Mr. Didier, an entrepreneur, formed a new company, P&A Garments, to manufacture garments in the Australian market. He is planning to start commercial operations from 1st July 2021. So this is a new business. They are going to start from 1st July 2021. Budgeted income statement and the expected turnover ratios for the first year is as follows, right? So the budgeted income statement and the turnover ratios given. And Mr. Didier used 360 days for the year to calculate the above turnover ratios, and income taxes are calculated from accounting profit at the rate of 20%. Estimate the working capital requirement of P&A Garments. It's very similar to the previous question. And so turnover ratio is given. You need to calculate the debtors value, inventory value, and creditors value. Can you do it quickly? Yeah, let's do it together. Right. So if you can remember the previous question, can you see this? Yeah, how we calculated debtors days? Can you see the Excel sheet? Can you see the Excel sheet?
Still on the paper.
can see.
No, not yet.
No, that is only the question paper still.
Yeah. No Excel sheet.
Can you see now?
Yes.
All right, okay. So this is the previous answer. The same thing. To estimate debtors value, say turnover. To the estimate inventory value, cost of sales divided by unit turnover, right? The creditors also, in this question, instead of creditors days, the turnover ratio is given. The same model, cost of sales divided by the creditors turnover, right? Okay, let's copy these numbers, the formulas, then it's easy for me. Yeah, can you calculate the numbers? My Excel got stuck. Can you see the Excel sheet?
Yes.
Okay.
Yes.
Yeah. Okay. Let's do the calculations together. Right. I'm going to delete all the. Yeah. I'm going to. Yeah. We'll delete this. Right. Sales. What's the value of sales?
50,000.
50,000. Okay. 50,000. And debtors turnover?
6.
6. Therefore, debtors days?
8,333.
Sorry, debtors value. So this is the answer. Debtors and so 8,333. Then inventory, cost of sales given in the question?
27,500.
27,500. And turnover ratio inventory?
5.
5. And the answer is?
5,500.
5,500. And you need to use the same formula. You can't use this formula here for this question. And cost of sales divided by creditors turnover. Creditors turnover. Cost of sales again 27,500 and creditors turnover
12.
Yeah, 12. So the creditors value answer is the same question. The only difference is the numbers, right? Only difference is the numbers. Therefore, your working capital debtors 8,000 plus inventory 5,500 minus creditors 2,291. 11,542. Working capital 11,542. Right. Next question. Next question. The Mr. Didier originally, can you see the question paper?
Yes.
Okay. The part 2, Mr. Didier originally originally planned to finance working capital requirement through equity, but now he is evaluating the possible options to finance the working capital requirement through debt. Westpac Bank agreed to provide a credit facility to finance the working capital requirement of at an interest rate of 10%. Estimate the tenure of the working capital loan and the impact of the loan on profitability. Right? Two things. You need to estimate the loan period as well as the impact on the impact of the loan on the profitability. Right? So this question 2 parts. Loan period you need to estimate. Right? To calculate period, you need to calculate debtors days, unit days, and creditors days. Right? And the impact of profitability, let's calculate little later. Right? So calculate days. Yeah. Let's use the Excel sheet. Days. Right? How to calculate the days? Again, the same way. Right? Debtors days, we know the debtors value, and sales, you can calculate the debtors days. Right? And Okay, can you see the Excel sheet?
Yes.
Yeah. Okay. What's the debtors value that we have estimated?
8,333.
Yeah. Is there 8,333. And sales value?
50,000.
50,000. And into 365. 365 and
Okay.
debtors days.
It has to be 360, no? He's taking as
Yeah,
360.
sorry. Yeah.
360.
Yeah. Okay. Yeah. Thank you. 360. So in the question they say 360, 360, right? So how many days? How many days? Divided by 360. 60 days.
Yes.
60 days. Yeah. So let's calculate debtors days. Debtors days. Sorry. Yeah. Let's calculate. We are not going to use this for unit days. Yeah. So this is from the previous question. Let's hide it. Right. So unit days. Inventory value.
Divide by cost of sales.
Yes. Inventory value.
That is 5,500.
5,500. And cost of sales?
27,500.
27,500. Into 365. Into again 360. 360. Yes. 360 is clear, given in the question 360. Therefore, use 360. Right. And let's calculate divided by this into 360. 72 days. 72 days. Then we need to estimate creditors days also, right? Creditors days also we need to estimate. Creditors days. How to estimate? You can use the same formula. Creditors value divided by cost of sales into 365. 360, right? In the normally 365, in this question 360, right? Okay, creditors value
1,291.7.
1,291.7. And cost of sales 27,500 and into 360. So number of days, creditors days, yeah,
30.
360. Sorry, 1,000 divided by
30 days.
360. What's the creditors value?
2,200. Yeah, it's wrong. 2,291.7. 2,200.
2,200. Yeah, it's 30 days.
30.
Yeah, 30 days. So it's creditors 30 days. Therefore, $30, right? So now you can calculate the working capital cycle. How to calculate the working capital cycle? debtors days plus inventory days minus creditors days. Working capital cycle. I'm not going to write the formula. Debtors days plus creditors days minus debtors days plus inventory days minus creditors days, right? So debtors days 60 plus inventory days 72 minus creditors days 30. 102 days. 102 days. So their working capital cycle is 102 days. Therefore, when they get a loan from the bank, the loan period should be 102 days, right? The loan period, answer 102 days. The impact to the profitability. Impact to the profitability. What's the loan amount?
11,541.
Sorry?
11,541.
Okay, we estimated working capital requirement 11,541. What's the interest rate?
10%.
10%. Therefore, impact to profitability. Can you take 10% of this? Impact to profitability? No. No. You need to take profit before interest and tax, and you need to deduct the interest cost, and you need to calculate taxes, and then only you can calculate the impact to profitability, right? So there is a tax saving on interest. Therefore, we can't deduct. So what's the interest cost? If it is 10%?
1,154.
Yes. So this into
1,110.
yes. 1,154. This is the interest cost. Interest cost. Right. Let's recalculate our profits. Right. Let's recalculate our profits, and starting from profit before tax and interest. Right. Profit before tax and how much? Profit before tax and interest.
14,500. 14,500.
Is given in the question. 14,500. Let's see whether this is correct. Profit before tax and interest. Yeah, it's 14,500. 14,500. Right. Then let's deduct interest cost. Cost. How much? We calculated
1,154.
54. So this is profit before tax.
10%.
Profit before tax. This minus this. And tax, what's the rate? Is clear in the question. Tax is 20% on 20% on accounting profits. Right. So 20% of this is your tax. This is your tax and profit after tax. Profit after tax. How much? This 10,667. So this is with loan. And without loan, what's your profitability? The before tax and interest, the same number, 14,500. No interest cost is 0 if no loan. Therefore, before tax is this, and the tax is this, and after tax is this. Is given in the question, right? So now you can see impact to profitability. Profit. The previous profit is 11,600. After the loan, profit is 10,706. Therefore, there's a reduction. Yeah, let's calculate another way. Minus this. There's a reduction in profit, 923. And also before tax, let's see. Before tax, right? This minus this. So 1,154, this equals to the interest cost. Before tax, right? You can see here, interest cost is 1,154, and here also 1,154. The difference between profit before tax, but here there's a difference in taxes also. There's a tax saving, right? There's a tax saving. Right? It has to be other way around. So there's a tax saving of 230. Right? Therefore, the impact to profit is 923 negative, not the interest cost. Right? Not the interest cost. The common mistake is most of the students say the impact to profit is 1,154, the interest cost. No, that's wrong. Right? That's wrong.
Mr. Priyante, that
Yeah.
interest cost calculation is correct. Is it correct?
10% of the loan.
10% of
Yeah. Okay. I understand your question, right? So when we calculate, this is their annual sales. This is the annual sales. This is not for a one working capital cycle, right? So they maintain throughout the year, they maintain the same loan amount, right? You need to maintain the same working capital throughout the year. So therefore, you need to maintain the loan also same amount throughout the year. So therefore, this is your annual interest cost, not for a particular working capital cycle, right? In your question, the annual sales, annual expenses are given. Therefore, the loan interest also you need to calculate for the whole year, not for a working capital cycle, right? Hope I answered your question.
Okay.
Yeah, this is correct. So impact to profitability is 923 negative. Right. So any other questions in this? Right. And CFO of P&A is of the view that the above estimated working capital is too high compared to the industry. Now he is planning to reduce working capital requirement to AUD 10,000. What strategies you propose to reduce investment in working capital? Right, is similar to the previous question. Right, reduce debtors, reduce inventories, and reduce debtors, reduce inventories, and increase creditors. Right, strategies you need to mention. Right, and please practice these two questions again. Right, and if you are not confident, you need to do this again. Right, practice the same question again. We are going to discuss another question, with slight difference next week, right? Or Saturday.
Tomorrow.
Tomorrow we are going to discuss topic 1, and so I am going to discuss revise topic 1 and all the questions from topic 1.
Okay.
Right. Okay. With that, let's stop now. It's 9:40, and please if others are not, if anyone is not there in this class, please tell them we are going to have a class tomorrow, and I will ask Nipunika to put an email or whatever the, you'll have a, I think, WhatsApp group. In that group, I will ask her to put a notice. Right? Okay. Thank you.
Thank you, sir. Good night.
Thank you, sir. Good night.
Thank you. So good night.